guys, it's September the 12th, and we are seeing a bullish day. But at the same time, even though I've not been as negative about circumstances, it's hard to trust a rally that is driven off of potentialities that are just out of anyone's, it's just the politics this year have made it very hard to be um, an analyst that's helpful, other than to just be very cautious. Don't have your gross too high in the wrong sort of ways. And man, part of me just kind of wants to go to cash, even though I might miss a little the first beat of it. But you can see the indices, they've been up more than a percent today, which is it's a one standard deviation move. Whenever it hits slightly over a percent, really it's 1.5% because we've had so much volatility recently, would probably be the better metric to use. But we have been pretty green today, despite being in the red all month last month. And it has me a bit nervous. You even have oil rallying. Dave had some good color when we were talking on the before we started up about how, that's really dollar weakness versus oil strength, and how those two play together. But, it's just a really hard rally to trust, I would say, in some ways. I'm going to talk about Hilton today just to give some color on it, because I do think this is a name that did really well on earnings and has not necessarily gotten the love, but at the same time, valuations aren't perfect on it. So I'm not necessarily aggressively beating the drums on it. But I do want to talk about it for what it's worth right this minute, as we are in between earnings season, and what maybe some of the macro implications are. Here's what the FinViz folks are showing is the distribution of where people are playing. You've got Apple and Amazon and Tesla up a lot. Google, for whatever reason, doesn't participate in these rallies the same way. And I always find that fascinating, because they're no less, like, they're just cheaper than everyone else. So it's a really strange thing. That Google and Microsoft tend to get slightly less lev on a day. You've got all the oil stocks, after being sold so aggressively, trading up. And then you really have this very funky week of economic data, which always makes me a little nervous. And you've got monthly options expiration for the companies that only have monthly options at the end of this week, Friday. So there will be some oddities, particularly in those securities, but even surrounding them, you should see some oddities as people decide what they want to do for positioning into this final quarter. Okay, you've got CPI tomorrow, and then you've got retail sales. Retail sales is probably going to look a little bit funky. Sorry about that. And then so that's Thursday. And then, those are your two major economic data, but they're fairly significant in an environment where people are very confused as to what the Fed might do. So I don't know. I don't love being super long in this market. I probably am neutral, and then I am struggling every day to keep my long exposure reasonably there, so to speak, because some of these things have just run up in ways that don't make any sense relative to what's going on. So now let's talk about Hilton and why I'm actually really constructive on them. And I think the first thing to note is that travel has picked up. Here's the TSA data. They apparently post how many people come through TSA. And you can see the blue line is 2022, 2019 is a non-COVID year. So it's really a comparison there. And I really want to just emphasize this. If we get any improvement on the geopolitical front, and we get maybe a little bit of, let's call it, calm it down a bit on like how different countries are thinking about COVID, then these numbers are far stronger than you'd even expect. Because realize, like, right now with TSA, you don't have a lot of back and forth travel to Asia, let alone China specifically. Now everybody's focused on China, but the fact is you would be traveling back and forth. Usually you would do the whole region if you were a salesperson trying to do a set of things, or, you'd be doing multiple countries. The cost also will go down significantly as these nations continue to feel more comfortable about what's going on that front. So you have a significantly between, US and those areas, you have significantly lower travel volume than you used to, but you have actually fairly comparable. These are monthly total people. This doesn't represent that this doesn't represent that, so to speak. This represents like even this would be like the blue line 2022 would look good even if there was no COVID. So if you add back in all the Asian travel, it becomes rather interesting. Realizing as well that for some countries, the US is on a special list because we've just had a lot of cases of COVID, and now we've got a couple of other things. So I wanted to show you on the macro that there are reasons why to get into certain parts of travel right now, it's not a bad idea. Airlines, we talked about that at one point. I may do a full-on tutorial a little bit more there, but the hotels don't have some of the fuel cost issues that others do. And I really want to kind of show you as well that the CapEx that was done during the early part of COVID when people really needed the work has actually benefited them. In fact, let's go through Hilton right now. These were Hilton's numbers. Revenue was up 68% versus 2021. So there was a little bit of a recovery in the third quarter. Remember, this is June 30th. So it's the first part of summer season. And you can kind of see from TSA checks that June is a huge travel month for us in the US, even compared to July and August. If you're from Europe, July and August are far bigger months for you on travel. But you can see it's up 68%. And then you have operating income almost a double in that regard. And that just has to do with the fact that there is actually economy of scale within the hotel business. Now, I really want to show you that let me do this one first. EBITDA, earnings before interest, tax, depreciation, amortization. This is a better metric for the hotels because you really do need to know that the cash flow is coming through properly. You do have an operating cost here, and there's lots of different ways to trick it. So you want to take depreciation out, which is for them fairly small. And I want to talk about that because sometimes people forget most of the hotel operators that were big. So it's really Hilton and Marriott. I don't know why I'm taking most. There's really two. Hilton and Marriott sold off a lot of the hotels themselves to other companies. So there is, for Marriott, ticker MAR, you see a slightly different dynamic. There's a little extra issues there, but like Host, ticker HST, is the REIT that actually contains the physical properties. So for Hilton and Marriott, they make most of their money off of franchise fees and things of that nature. They do still own some portion of their hotels. I'll show you that in a second. But as a result, EBITDA can really ramp back up fairly easily because you know, the tax expense, interest expense, depreciation isn't as bad as you might mentally believe it to be for these companies. Like I do want to actually just show, so yeah, you have a pretty good uptick. And if you look at a lot of the data feeds, they're showing a number of like 1.9 billion for EBITDA for the year, okay? Just so you know, in the 6 months ending June 30th, we're already at 1.1 billion on an adjusted basis. And 1 billion on a 2022 EBITDA basis. And then you can kind of see just on the 6 months ended and on the quarter, you can see that given if you take 679 and subtract it from 1127, you get more than 50%. It means that at each quarter sequentially, you got a better number in June ending. So what I'm saying is that forward-looking EBITDA is probably understated in a lot of data feeds because I'll show you, let me see if I've got this set up properly. And I always like to check the difference between what I'm seeing when I go to do the calculation versus what I'm seeing in the data feeds, because that actually is a thing that happens. But if you look down here, this EV to EBITDA number is calculated off of this number down here, 1.93 for EBITDA. And that is lower than I would anticipate it to be in the current environment with inflation, with the pickup in traffic and various things, and so on and so forth. Realizing as well that while domestic travel has improved, you still don't have that crazy international travel into the United States from other nations, as well as us going to other nations. When Americans travel, they do tend to, strangely enough, stick with the big brand, big box type hotels. When international people travel, it's a little bit of a different and mixed bag. And then when we travel here domestically, we tend to, like, if it's business travel, it's typically going to be at one of the major providers. So that's just something to note, is a potential tailwind, is if we really get any benefit going on there. these companies should do well. Now, the last thing I want to just show you for folks that have been using just the research from broker dealers and not actually having a chance or feeling too intimidated to go in by yourself is that Hilton does a wonderful job, as does Marriott by that matter, of all their investor materials. This is one I always find really interesting. It's hot here in Siesta Key, which is where I'm at today. But here you can see where so occupancy rates are shown both by region and also by system wide. Okay, and I really want to show you this again, Asia Pacific at about 50%, right? This really highlights what I'm saying is that this company is making awesome numbers, despite the fact that you're not getting Asia travel, you're not getting Middle Eastern travel in any kind of meaningful way. And your Europe is recovered a lot versus 2021, but you're still not at 100%. Really, none of them are at 100%, but you're doing this amazing job on earnings off of 70% occupancy. What is that? How does that compare to 2019? You know, at 2019, these numbers aren't showing. It's such a different mix that I almost hate to demonstrate it. But just given the build that came off of 2019, you should have this closer to the mid 80s for almost all hotels. So you really are getting more per room. And that number is demonstrated by revenue par. Rev par really demonstrate what they do is they take the given a room, given the price that you'd like to get to it, they multiply it out. And so Rev par gives you a sense for given the total income that you ought to get off that room. And it's up 54%. And that's probably because the occupancy rate is better. But given that the occupancy rate is only 12% higher than last year, this 54% they are getting better pricing on their hotel. So short story long sometimes with me, but I wanted you to know that the way that they slice this data and the way that they present it doesn't allow for you to be cheating, so to speak. And the street is accustomed to seeing a RevPAR number so that they know that you're not cheating because maybe you're pricing up these rooms like crazy, but not necessarily having them occupied all the time. RevPAR is really the metric you're going to look at to know that that's not a cheated number. But in general, if you look at Hilton, you're seeing absolute progress off of the COVID period in a way that makes them very interesting. Now, I kind of want to show you the statistics on it because I'm not necessarily piling it into it today. This market is so skittish. I just want to have done all my research such that if it goes to my price, I'm a happy gal. But this is what we're seeing. Realizing that the last few quarters have been crazy on valuations because people had to kind of project where's it going to go post-COVID. We're now at, however, 23 times, according to them, EV to EBITDA. But realize I think that EBITDA number is wrong. So I think it's actually a bit higher. So you are probably under my estimate, probably slightly under 20 times. And it is growing significantly. Now, what kind of growth will we see next year? That's something to take note of. If we get any uptick in Asia, like I said, you can see very clearly what Asia is doing. So that coming up will be a big deal as well. I am definitely trying to find spots to pick it up. Probably, though, I was hoping to try to get it and be greedy and get it under 130. I'm so greedy. I'm so sorry. But at the same time, I'm hoping to try to pick it up under 130. So if we get one bear market day, I will be looking at Hilton because I do think that the things that they're doing are phenomenal. And with that, I will hit the stop share and take some questions. Anything going on? I know it's kind of a weird day, right, David?
Oh, hi, Mia. Well, I mean, it's something unknown is pushing the market up. So, resolution in
Yeah.
Ukraine could be. I mean, it's far-fetched, yeah, but you have to imagine what's happening behind the scenes.
I
And
think
in the
you're right.
midterms, that makes the Democrats really look good if they get everything resolved as far as the world's problems.
I agree
Um,
with you.
your Albemarle call is brilliant. Do you
Yeah. Albemarle, you know what? I actually didn't get too greedy and came out of it, I think around when it first hit 290 or so. So, and it's not because I don't think, I mean, I do actually think that you'll end up with, oh, it might start raining out here in a second. I think I'm under coverage. So yeah. So, but Albemarle is one that I kind of want to own long term for the portfolio. So if you own it right now, you may or may not want to just, if you can get some really exciting calls higher up and on slightly shorter dated, I would hedge that way. Albemarle is really the way that the US will probably long-term get its lithium. And if you get any China opening up, any China improvement, they have so much of their business in China. They definitely do make lithium in China, that this stock absolutely will go up on a China lift as well. I currently am a little embarrassed because I'm not in it anymore, because I thought I was going to be greedy. So I was like, okay, I'm out. This has gone from 200 to almost 300. I feel very nervous. But in fairness, if the whole thing is China and Russia and everything in the world kumbaya for the democratic elections, this should go up.
Correct. Okay.
Yeah. Any other questions? I had such a weird day. This market is just doing whatever it wants
Um,
to.
Oil, I mean, oil is going to appear cheaper with
Yeah,
a weaker dollar. So, even though there might be an end to the Ukraine conflict, oil could. I mean, there's still a supply issue there.
there is. Oh my
Yeah.
gosh, I might get one of those Florida open up and pours. Yeah, no, I agree with you.
Okay.
All
Right.
right, we'll end it there so I don't get rained on.
Okay.
I'll see you
I
guys
mean.
tomorrow. Good luck out there. Bye, guys.